leaders and market movers. This is The Pulse with Francine Lacqua.
Friday morning. Good morning. Welcome to The Pulse. I'm Guy Johnson, in for Francine Lacqua. Markets, OK, let's separate the markets out. Bond market thinks that we're going to see a recession. Equity market thinks that we're going to see a soft landing. That seems to be the sense right now. We seem to have got through Nvidia without much turbulence. Various reasons for that in terms of the way options were priced. But it's been a month where we've seen significant volatility. Remember the 5th? Remember the volatility we saw during that period? I think the game is about to start getting really interesting. We're getting into the labour market data next week out of the United States, and we seem to be largely factoring in rate cuts coming through from the ECB and the Federal Reserve. Aliki, Rouffiac, portfolio manager at Robeco, joins us now on set. Nice to see you.
Good to see you too.
The bond market wants a recession, thinks a recession's coming. The equity market thinks it's a soft landing. Which do you think is right?
Listen, we have heard from the Fed at the recent Jackson Hole that there is a somewhat shift from the focus from inflation towards the downside risks that may come due to a weakening labour market. So prospectively, we are focusing on the next labour report to see if this is going to be true. But also we are expecting now that rate cuts would start in the US with the first rate cut priced in at 25 basis points. Thereafter, the picture remains uncertain because what we really need to see is labour market weakening to justify further rate cuts and more deep rate cuts, but also the impact from financial conditions, whether we would see a tightening and how this would affect the overall credit market as well.
If you see 25 basis points, does that signal a soft landing? If we see 50 basis points in the Fed, does that signal a hard landing?
It depends. 50 basis points is quite a deep cut. The market is not pricing in this yet. And it could potentially be the start of a much faster pace in terms of rate cuts by the Fed. But we really need to see the data because upcoming rate cuts are going to be data dependent. And what we've seen yesterday, it was actually an upward revision in GDP. US GDP growth came at 3%, surprised somewhat on the upside. And the main driver has been consumer spending. So the consumer is spending for now. And if this pattern continues, obviously, inflation is going to be potentially higher what everybody might be expecting, and rate cuts might not materialize as fast as what is priced in now.
I can't believe these words are going to come out of my mouth. Is there a danger that the bond market is wrong and that the Fed is not going to cut as aggressively as currently being priced? We've got 100 bips priced between now and the end of the year and into next year. The ECB is not going to be as active as maybe we anticipate that it will be. How big a danger is there, to your point, that actually the data are going to come through better and the inflation risk is going to rematerialise as something that we need to worry about?
I think from a positioning perspective, what we favour as well and what also the market is positioned for is steepening on the yield curve. Currently, we don't want to take an outright view on duration, basically ratifying a potential hard landing scenario. At 3.8%, the US 10-year rate seems too low under a soft landing and a terminal rate of 3%. So for now, we just on a wait-and-see mode in order to understand the evolving economic environment and position for that when the right time comes.
But to come back to the beginning, does the evolving economic environment, do you think it favours equities or bonds at this point in time? I keep talking to people. This is the debate that is really getting going at the moment. Nobody can figure out whether or not you want to be in bonds, overweight bonds, or equities. Equities are trading up near kind of record highs. How much complacency is built into that, given some of the economic backdrop that we're watching at the moment?
I think for now, from a tactical asset allocation perspective, we have a mild overweight to equities, and the reason being is, despite that we see very lofty valuations, especially in the US space, there are pockets of value that selectively we have added in terms of...
In the States?
In overall globally. So we favour mainly healthcare, which is more defensive. We have seen also the leadership changing from cyclical to defensive sectors. and this would play out well even if we are at early stages of recession. Also, we have closed our underweight to European markets, and Europe is also an area where we see inflation coming down. We have noted yesterday German inflation has surprised on the downside. In the morning, France has printed inflation also close to 2%, what the market was expecting. And prospectively, we're expecting also European inflation to come around 2% level today. So Europe has already started to perform. As well, on the financial space, we have seen some solid earnings, especially from banks. There also the story is a more favorable one, as we are also expect some of the regulatory capital reforms to be pushed back in 2026.
It would be remiss of me to leave August without talking about the volatility that happened at the beginning of August. What was that? Should we get used to more volatility? Do you think we're going to see more volatility spikes? How does that affect my risk tolerance coming out of August into September, October, which tend to be reasonably volatile months as well?
Absolutely. The very interesting pattern that we've seen in August is that despite weak seasonality, we have seen equity flows actually being fed through the market, especially after the market pullback that we've seen earlier in the month. So from the perspective of sentiment has turned bullish. Equity flows also have accelerated. We had 18 weeks of positive equity inflows. And this has brought the overall flows to 250 billion, which is quite substantial.
Are you surprised by that? It seems as if we've just ignored, we just put what happened at the beginning of August in the rearview mirror, and we're not worried about it anymore. Is the market underplaying the risk that we do see more aftershocks or shocks when it comes to volatility?
Listen, the market, I think, is trading where fundamentals are, and the latest earnings reports have shown a healthy earnings growth of 11%, and this is supportive for now from a fundamental perspective of overall equity risk. Going forward, obviously, there are other risks, election risks as well in the US that could potentially create more volatility. But for now, this could be potentially seen as a buying opportunity, buying the dip for investors to capitalize selectively where markets reprice.
Aliki, nice to see you. Thank you very much indeed for stopping by this Friday to join us here at Bloomberg. Aliki Rouffiac, portfolio manager at Robeco, joining us on what's happening in these markets. We're heading into a long weekend over in the United States. You're probably going to see volume rolling over a little bit into that in maybe the latter parts of today's session. Pre-market, though, we've got some interesting stocks that we're watching out for at the moment. Pat Gelsinger apparently talking to his bankers right now, wondering whether or not he should break up Intel. It's been a really difficult run for that business. The stock is popping a little bit this morning on reports of that. Dell Technology up very strongly. Those numbers were good. It's doing well on the AI server side of things at the moment. That's very much being reflected in the pop we're seeing in the stock this morning after the company reported that late last night. That stock is up by 6% going into the open over in the United States. And Lululemon also on a little bit of a tear this morning, up by nearly 4%. Sales guidance beating, being good, but also seen as being beatable going forward from here. So that stock on the front foot as well this morning. US futures largely becalmed, though. Not a big pop anticipated stateside as we come towards the end of this week. Politics, though, is front and centre stateside. Kamala Harris laying out her plans for the White House. She did a first critical interview. She did it with CNN. This is the first interview she's done since she took the Democratic presidential nomination. She did it with her vice presidential pick as well, sitting next to her. We'll discuss all of that next. This is Bloomberg.
My my agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing. And I made that clear on the debate stage in 2020, that I would not ban fracking. As vice president, I did not ban fracking. As president, I will not ban fracking. There should be consequence. We have laws that have to be followed and enforced that address and deal with people who cross our border illegally. And I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. We have to get a deal done. This war must end. In the meantime, and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
Kamala Harris, the Democratic presidential nominee, sitting alongside her VP as well. We'll see what impact this interview with CNN has. It wasn't amazing, but on the other hand, it wasn't a disaster either. Harris pledging to address economic issues, talking about the middle class, talking about a possible ceasefire in the Middle East, talking about putting a Republican in her cabinet. She did okay. That seems to be the sense at the moment. Bloomberg senior writer who covers this subject, Stephanie Baker, joining us now. What's your take? How did she do?
I think you're right. There were no big surprises, which for Harris will be counted as a success.
Yep.
The only reason why there was so much attention on this interview is because she hasn't done one since becoming the nominee, so she needs to do more of them so that there's less riding on each of these interviews. I think it was pretty clear that she's better on the stump giving these speeches than she is in a sit-down, unscripted interview where she was at times a bit rambling. She stuck to Biden's policies and supported his positions on a number of issues, which, she had a very difficult challenge there. She had a difficult time threading that needle of supporting the administration she's been part of for the past 3.5 years while forging some new political identity that makes her distinguishes her from Biden. But
the Republicans are looking for a target. They're looking for something to shoot at. She didn't present much of a target in this interview.
She didn't, and that was what she set out to do. She spoke very forcefully, supporting support for Israel, Biden's position on Israel, which I think will, be a disappointment for some within the Democratic Party. It was interesting that she wasn't even asked about Russia-Ukraine. I think she's viewed as having, sticking with Biden's position on that, with strong support for Ukraine and a tough stance on Russia. I think this was a success for her, but she needs to do more of them.
Maybe she needs to get better at them, but a fairly good first start. I think probably her strategist would argue. How did Tim Walz do? And is the sum of the parts of the two of them greater? Because the criticism of the Republicans is that they're kind of that we're seeing the presidential nominee and the vice presidential nominee kind of in different orbits. Are they in the same orbit, these two?
I think it's a really unique team that they've forged. They came under criticism for doing this interview jointly, which I think was, wrong.
Yeah.
It's tradition for nominees to sit down with their VP pick right after the convention. Trump did it with Vance. Biden did it with Harris. He was unusually quiet during this interview. He didn't say much at certain points. He effectively defended his positions, his misspeaking on things like his military record or his family's struggles with fertility. I do think they wanted to put him out there because he does appeal to the kind of voters that she is having a harder time with, non-educated white men.
Yep.
In swing states. And I think as a result, the combination of the two on this ticket is greater than, the sum of the parts.
In terms of the polling, we've done some polling. She certainly, the honeymoon bounce that started when she first was kind of put on the ticket seems to have continued. If I was, and I'm reading a lot of this coming through from the Trump camp at the moment, their strategists are basically saying it should be greater. She should be miles ahead. Why isn't she miles ahead? Why isn't she polling even greater than she is right now? Because at some point that honeymoon is going to fade, and at that point this is going to become a really tight race that is probably going to favour Trump.
It's true. I mean, she's narrowed the race considerably, but it's still statistically a dead heat, which is kind of remarkable considering all the enthusiasm that we saw after her nomination, after the Democratic National Convention. She's pulled ahead in crucial swing states, notably North Carolina, which, I think is a real surprise. But you would expect her in many ways to be even further ahead. Whether or not voters just need a little bit more time to get to know her and Walt, and she will cement that lead and pull further ahead. Whether abortion isn't really being accounted for in these polls, because it's a really important issue for a lot of voters in swing states. Is she going to be able to build on this? Is this a sugar rush that's just going to fade? It's hard to tell, but I agree with you. I think I would expect her to be further ahead in the polls at this point, given the enthusiasm we've seen.
Stephanie, great stuff. Thank you very much indeed. The breakdown of what we saw last night in that CNN interview. Bloomberg senior writer and investigative reporter Stephanie Baker. Coming up, we'll take you back to some of the corporate news. Intel calling in the investment bankers to help plot a path through the most difficult period in this company's history. We'll have the details of this story next. This is Bloomberg. Intel is up pre-market. The story is that this is a company that is said to be exploring options to cope with a difficult and historic slump. Pat Gelsinger has really struggled to turn this company around. The bankers are now talking about various options, including maybe spinning off the foundry business and putting some of the big kind of expansion projects on hold. Bloomberg Intelligence senior analyst Robert Lee joins us now. He's had a busy week. What is the challenge here, and what are they talking about in terms of the remedies?
OK, well, Intel's growth is tied to the PC industry sector. In terms of PC processors, it's dominated for many decades. Its problem, though, is that the PC industry is mature, it's ex-growth. So it's tried several times over the years to diversify into new markets. Casting your mind back 15 years ago, it tried to make it big in mobile, didn't really pay off. More recently, it's tried it in the foundry sector. As you appreciate, that's dominated by TSMC and the Taiwanese. So it's struggled to grow its top line. It also is a business because it's what's referred to as an integrated device manufacturer. It designs the chips, it makes them, it markets them, it packages them. It does everything. So it's carrying a very large cost base. So you may remember earlier this month, it announced plans to let go of around 15% of headcount. But the foundry business, where it's struggling to compete against TSMC, has been a problem for it because it's losing $7 or $8 billion per year. So this unconfirmed plan is that they could potentially look to spin off the foundry business, obviously, freeing up resources to potentially expand into other areas. And I guess one of those will probably be AI, but we will see.
AI seems to be the subject of the week. I see Reuters reporting that Amazon's revamped Alexa is going to be powered by Anthropic. Let's talk a little bit about the OpenAI story. Everybody wants to get in. Lots of people are bidding potentially to be part of the funding round. NVIDIA could be the latest in that story. Why would it want to get in on the OpenAI story?
Well, obviously, OpenAI, with its ChatGPT platform, is one of the, it's got first mover advantage, is one of the most dominant platforms out there on the chatbot side. And obviously, they are a significant customer of NVIDIA. So therefore, it makes a lot of sense strategically to take perhaps a stake in one of its main customers and try and, cement its position within the industry. So I think that would be the rationale behind that. There's also talk of maybe Apple taking a stake, but we'll have to wait and see on that front.
Robert, thank you very much indeed. Greatly appreciated. Been a busy week. We've really appreciated the input that you've been giving us throughout this week. Bloomberg Intelligence senior analyst Robert Lee, thank you very much indeed. Coming up, we're going to talk about what is happening in the emerging market credit business. A weakened dollar, falling treasury yields, making emerging market assets much more attractive. We're going to get a take on that story next. Trang Nguyen is going to be joining us from BNP Paribas. We'll get a view. That's next. This is Bloomberg. morning. Welcome back. You are watching The Pulse. Approaching half past the hour. I'm Guy Johnson in London in for Francine Lacqua. Let's talk about the top stories this morning. European stocks closing in on a fourth week of gains. The Stoxx 600 is actually at a record high this morning. We are seeing hopes of growth, lower rates, soft landing in the United States, all playing out. It's a long weekend coming up in the United States. We do have some inflation data before we get there on the other side of the Atlantic, plus this side of the Atlantic as well. Talking of politics, let's show you what is happening with Kamala Harris speaking in her first TV interview since she became the Democratic nominee. She's talking to CNN, saying basically voters are ready to turn the page on Donald Trump. She's now leading or tied in the most consequential swing states in the United States. This according to Bloomberg's latest polling. Plus Intel exploring its options. Bloomberg learning that the chip maker is speaking with its investment bankers, helping to navigate maybe the most difficult period in this 56-year-old company's history. What does it do next? Is it going to spin off the foundry business? Key questions need to be answered by Pat Gelsinger. Let's talk about where we are in terms of the rate story as well. We've got key data coming out, core PCE coming out of the United States a little bit later on. Payrolls are next week, though. The recent signals from the Fed seem to indicate that it's going to be cutting rates in September. That feels fairly nailed down. The ECB kind of moving in that direction as well. We've seen, obviously, the bond market moving this month. We've seen lower yields, particularly at the front end, steeper curves, except in the UK, which is interesting, but maybe we'll come back to that story a little bit later on. The thing that's kind of flown under the radar a little bit for me over the last month has actually been the strong performance we've seen in the emerging market credit space. China is one area that I really want to focus on. But the politics, let's come back to the politics and talk about how this could impact this going forward from here. Trang Nguyen, Global Head of Emerging Market Credit Strategy at BNP Paribas, joining me around the table this morning. Nice to see you. Let's talk about politics. US elections coming up. Mexico's a key credit. Walk me through how much is priced in, because we seem to be flip-flopping at the moment, and people I'm talking to can't quite figure out what to do. You've got a Harris trade, you've got a Trump trade. What is the Harris-Trump trade in relation to the EM credit space?
Sure. Well, thanks for having me. Now, if we look at the performance of EM credits more recently, we've really fully retraced the sell-off that we saw on the back of the widening in early August on the back of U.S. growth concerns. So I would say we're not really looking at a whole lot of premium here. And in the run-up to the U.S. elections, we're going to see more volatility. And history will tell us that typically that picks up after the Labor Day holidays in the U.S.
Yeah, that's Monday.
So, exactly. So next week, and so we have U.S. politics, a lot of uncertainty, and there's also some seasonality that we're concerned about as well, given that September is typically when issuance volumes will also ramp up, and that puts more pressure on credit spreads also.
How big a difference, what's the spread between Trump and Harris in terms of the impact that they could have in terms of these trades?
Well, I'd say the Harris trade is status quo.
Right.
Trump will induce more uncertainty, and I think that there are several channels that markets will want to assess. It's going to be the tariff channel, and it's going to be the fiscal channel as well, with varying implications on EM. Now, this is not unprecedented because we have a 2016 playbook that we can lean on. Now, take Mexico, which you mentioned. If you adjust for credit spreads now versus for Mexico versus where credit markets are now compared to 2016, Mexico is very tight. So that to me suggests that we're not really seeing a whole lot of political premium in the price at the moment. And so that calls for more volatility ahead.
So is that tightness just reflecting the polls? The fact, talk me through how tight has it got since Harris came onto the ticket? Has it tightened since Harris came onto the ticket?
Yeah, so I think perhaps a couple of months ago, markets were working with a more decisive assumption that a Trump victory was in the cards. And now we're looking at very tight polls. All right, so that uncertainty perhaps is one reason why we're not seeing a whole lot of political premium in credit markets. But I think that that's going to pick up, and that's going to change come next week.
What's the reader? At the moment, there seems to be some certainty that the Fed, the ECB, etc., are going to be cutting. People I'm talking to are kind of less certain about kind of what happens next. There seems to be an increasing sort of divergence between the folks that I'm talking to about whether or not inflation comes back, which seems like a horrible risk, and whether or not ultimately you see a sort of more of a hard landing. In terms of the kind of the tail risks you're seeing in those DM markets, walk me through how that gets amplified maybe into the EM markets.
So I'd say the growth concerns are now at the fore, but I don't think that's what markets are going to be focused on. Our BNP credit-based recession models still put the odds of a recession in the next year at below 30%.
Right.
So, yes, it is a concern, given that the markets were really not pricing a recession, barely pricing a recession at all. So that repricing has to happen, but I think the politics are going to trump the growth and inflation concerns in the near term.
Okay, so that's what's going to cause the volatility. The thing that's really flown under the radar for me, and with you coming on, I sort of checked a few numbers. China credit. A real outperformer. The numbers are really quite surprising, given the kind of the backdrop that we're seeing more broadly. The numbers are really quite. Why?
So the narrative remains unchanged. Growth is tepid, and stimulus measures are timid.
Yep.
But I think it's enough to kind of put a floor on prices. And this morning I saw an article on the terminal that the Chinese authorities are asking banks to reset mortgage rates again. Again, this is not unprecedented. We saw this last year as well when the PBOC asked banks to reset mortgage rates so that the gap between existing loans and prevailing market rates can be narrowed. So this, in our view, could result in some savings, so boost to savings and therefore consumption. But whether that will actually boost sales in the physical market remains to be seen. But this is kind of symptomatic of the measures that the authorities are carrying out, which is enough to kind of stem further sell-off in bond markets. And that's why we see China high-yield markets are up 12% this year.
Yeah, amazing. The currency, is the currency just an effect of that, do you think? We're seeing the yuan actually getting a bit of a boost as well.
Well, there's a broader macro narrative there, right? We have Fed cuts, which are now accepted as the base case. Asian currencies previously were seen as, funding currencies, low carry. So the rally in global bond yields have kind of reduced that narrative a little bit. And therefore, for China specifically, beyond this broader macro narrative, there's also hedging activities by corporates. And so we see room for this appreciation to actually continue.
So political volatility is something we need to pay attention to, seems to be the message that I'm getting thus far. What we're through the rest of the year, where am I watching? Give me the sense of kind of where the opportunity lies, where the threat lies as well, in terms of some of that volatility and where I want to kind of manage my risk.
Yeah, so I've been very constructive in EM high-yield credit for some time, but we have to, really be prudent here. EM CCC has rallied over 30% year-to-date. We have conclusions in restructuring stories, which is a positive for the asset class. The chapter is now turning. In fact, Ukraine bonds and new restructured bonds are settling today, so we have a new set of bonds to trade. But at the moment, when the CCC complex is up over 30%, when you have election risks, which we think are going to be at the forefront, we have to be a bit more prudent here.
So headroom, more, not maybe a little bit more to come, but it's going to be hard yards to get those gains from here on in. Does that mean I want to take some risk off the table?
Well, I think that's probably a prudent thing. If you've held Ukraine bonds, if you held CCC and it's been up 30, 40, 50%. Yep. But I think the strategic thesis remains intact here. I think there is still a strong case for EM credit. And with Fed cuts, that also means that inflows will probably come back as well. Great to see you. Thanks very much indeed for stopping by to see us. I'm glad I paid attention. Trang Nguyen, the Global Head of EM Credit Strategy. Thank you very much indeed. Let's talk about some of the corporate stories we're watching this morning. Bloomberg has learned that Brookfield Asset Management is in talk with several investment funds to join a bid to acquire the Spanish blood pharma company Grifols. Sources say Abu Dhabi's sovereign wealth fund, ADQ, and the Singaporean counterpart, GIC, are amongst the investors that Brookfield has held talks with over a potential partnership. No agreement has been reached with any of the funds. Remember, this is effectively a kind of take-private that we're watching unfold here. ThyssenKrupp Steel Unit CEO Bernard Osberg will leave the company along with several supervisory board members and other top managers following a dispute over the troubled division's future. Dennis Grimm will take over as interim CEO of the unit. The move comes after weeks of tussles between executives and worker representatives over efforts to restructure this German business. And Bloomberg understands that the UK's top financial regulator is set to delay the next wave of bank capital reforms. It marks the latest example of a major global rulemaker abandoning its timetable for the changes until the US finalises its packages, should I say. Sources say the Bank of England is poised to announce in the coming days that it will postpone its entire package until January 2026 at the earliest as it monitors international developments.
What have we got coming up for you? Let's talk politics again. Germany's far right looking to advance in regional elections this weekend. We're going to look at what it could mean for Olaf Scholz's coalition government. We'll do that next. This is Bloomberg.
Germany has an economical problem. We're not totally shrinking, but all the great times where we really had a profit because of China growing that fast and we could export almost everything made in Germany to that country or to the region, this is over.
Otto Fricker talking to us a little bit earlier on, member of the Bundestag and the budget policy spokesman for the FDP, the Free Democratic Party, joining us a little earlier to talk about kind of where Germany is economically. Let's talk about where it is politically. We're heading into a key weekend. Two political stories we are watching in Europe. In France, Emmanuel Macron's popularity ticking a little bit higher, which is strange, despite him failing to name a new prime minister. This obviously, of course, follows the snap parliamentary election in France, which has led Macron with a lot of egg on his face. Then we turn to Germany. Regional elections are going to be taking place this weekend, posing a real challenge to the ruling coalition. Let's talk more about all of this. Bloomberg's Ollie Crook joins us here in the studio. Will Horvath joining us in Paris. Ollie, let's start with you. How important are these elections?
Yeah, we're going to get into the polls a little bit, but let's just sort of set up the conversation here, because these are two states in eastern Germany where the AfD, the Alternative for Deutschland, the far-right group that we've talked about in Germany really for years, starting to gain real momentum in both of those regions. So it's in Thuringia and it's in Saxony. They are expected to win the #1 spot in Thuringia and potentially in Saxony, though the CDU has edged them out just a little bit in recent polling. I mean, some of the chapters of the AfD are designated extremist groups by the German government, and all of the other parties within Germany, the mainstream ones at very least, have refused to enter into coalition with them. Where things get sort of interesting is that there's a fly in the ointment for the AfD, and that is Sarah Wagenknecht, which is a new left-wing party that is working on many of the same platforms as the AfD on two issues, namely on immigration. They're both very anti-immigration, and also on support for Ukraine. Both of them want to see support for Ukraine dialed back, and there's been a little bit of cannibalizing of the AfD vote from this party in some of these states. Now, here's a question with Sarah Wagenknecht is, will the mainstream parties work with her? We know that they won't work with the AfD, a sentiment that was echoed by Otto Fricke a little bit earlier, but would they potentially work with her? When we look at the polling, I want to pull up Saxony in particular, not because the AfD is leading the most there. In fact, AfD is leading more in the other polling, but Saxony is a really interesting region in Germany because it is home to so much of the chip building. We talk about that TSMC plant that's coming in from Taiwan, from the chip makers. This is a region that needs people to work in those factories. You need skilled labor. You need immigration, so potentially why the CDU is coming up a little bit closer there. But as you can see, the SPD, the governing party right now, Scholz, the Greens, and the FDP, those are the three parties in coalition right now. They're not even going to get single digits in this region, Guy.
Ollie, it's going to be a fascinating weekend. How will it reverberate in Berlin? I think it's going to be really interesting to watch that story. Let's turn from Germany to France and figure out what is happening with the French political story. There are rumours that maybe we get a new prime minister announced over this weekend. We're hearing potentially Sunday night. France kind of goes back to work on Monday morning. Schools go back, etc. And that would be nice timing. Will Horvath joins us now to discuss. Will, how hard is it to handicap that Sunday night story?
It's pretty, well, I'd say it's very unclear if we'll definitely get anything on Sunday at all, because a lot of the difficulties that Macron has naming a prime minister haven't really gone away. He's still in search of a perfect candidate who can, in some ways, achieve the impossible of bridging together all these sort of ideologically opposed factions in the French Parliament that have emerged from this, from the snap elections that he inflicted on himself in June. We're now I think we've beaten records for any kind of time without an actual government in France. But, you know, there's no actual deadline for Macron to come up with a new prime minister. However, there is the pressing matter of the budget, which the new government really needs to get to grips with to present by the end of September.
Is the left cracking? That seems to be what he's waiting for.
Yeah, that would be you could see that as almost sort of a necessary condition to be able to have anyone who can bridge the gap between the different groups. And so there's a lot of speculation that the potential Prime Minister candidate would be sort of an elder of the centre-left who's kept out of the front line of all the bickering of recent months and even years. And they might stand a chance of sort of sewing together some kind of majority, or at least a majority of lawmakers who would agree not to bring down the government in a no confidence vote.
How big a challenge is that? The numbers look fairly daunting. Even if he can kind of pull something around the centre-left, he's still going to struggle to deal with that no-confidence vote issue, isn't he?
Yeah, that's a real threat, and it's always been there. It's been there since 2022 when he first lost his absolute majority in Parliament, but he was pretty close to an absolute majority, and so the threat wasn't entirely there, because it would have required nearly all lawmakers to unite against him. But now, we have a Parliament that's split into 3 blocks, and some of them are very unpredictable. We don't really know how the far right is going to behave in confidence votes, and it's pretty clear that that some of the divisions between the far left and the centrists are so stark that they will sort of just by reflex try and vote down any government that isn't their own.
It's going to be an interesting weekend. Maybe it's going to be an interesting start to September. Oliver Crook, Will Horrobin, both of you, thank you very much indeed. We'll keep an eye on both of those stories very carefully and bring them back to you on Monday morning. Coming up, it's been a tough month for the dollar. We're going to take a look at the closest kind of rivals to it, what's been going on in the currency space. It's been a really interesting month in so many ways. We should probably digest and think about a little bit of what has happened. We'll do that next. This is Bloomberg. Welcome back. We're a little off it, but the Stock 600 this morning has hit a record high. This is the kind of the longest term chart we can go back to and look through. As you can see, we've been climbing kind of left to right. It's been interesting. Where the bumps are, I think, are really interesting in terms of obviously the 08 story. You can see COVID in there really clearly. But the rally has been fairly dramatic since then. Obviously, if you were to compare and contrast this to the to the S&P, it looks fairly diminutive, the rally that we have seen. But we have hit a fresh record high this morning. You got 464 stocks up at the moment. You got 124 down. You got 12 unchanged. Novo Nordisk, unsurprisingly, adding the most points this morning. Let's switch from equities to what is happening in the foreign exchange market. This month has been really interesting. You can figure this out on your Bloomberg quite easily. GMM is the function maybe you want to plug in. You do that, you look at what has been happening, you can pick your basket, then go to the month to date and figure out what we've seen over the last month. And you'll see that the Swedish krona has been a real performer. The Norwegian krona, the Swiss franc has been a real performer. The British pound is up by 2.5%. The dollar has been under pressure. Even the euro up by 2.4%. Still trading, though, at 108.40. We have seen some weakness over the last few days. The Swiss franc now causing concern around maybe intervention risk. Let's talk about all of this. Bloomberg's Ven Ram joins us now to discuss. Ven, what do you think? August has been bad for the dollar. Has it bottomed out?
It's approaching a bottom, Guy. I think that, what we saw in August, as you mentioned just now, is pretty curious. The currencies that have rallied the most are the New Zealand dollar and the Swedish krona. Ironically, those were the central banks that actually cut rates this month. So what is on display here is the higher beta of some of these currencies, and that higher beta will continue to be on display in the coming months if the markets are right about what is going to happen with the Fed's rate cuts. In that environment, I expect the Swedish krona in particular to perform very well, the Japanese yen and the Swiss franc to do extremely well in the coming months.
That does beg the question about whether or not we're going to see the S&B digging into its intervention playbook once again. Certainly that risk seems to be rising right now. The other thing that's really kind of caught my eye over the last month has been the fact that we've seen such big underperformance at the front end of the UK curve. So elsewhere, we've seen a really big bid coming into bond markets in the 2-year tenor. But the UK's been different. And we saw a real stark contrast between Powell and Bailey at Jackson Hole. How much more has that trade got to run, do you think?
Well, I think that, UK gilts at the front end are going to underperform in the coming months, guys, for the simple reason. If you look at the spread between the 2-year and the policy benchmark in the UK, it's the most negative since the global financial crisis. And that kind of negative spread that we are seeing is an indication of what the markets are expecting vis-a-vis the BOE's benchmark rate and its trajectory, rather. So I think that the markets have done it too much, have overrun with the idea that look, the BOE is going to cut rates deep. Yes, the BOE has room to cut rates, particularly because it has got a real policy rate to play with. It has got a considerable buffer, like the Fed, and unlike the ECB, it's got a considerable buffer. So the BOE's rates are going to go lower, but I think they've overdone that. They've overstated that by running too much of it. They have run it up front, and therefore the markets are kind of underperforming. Yep. And that's not surprising to see.
Do you think, therefore, sterling's run out of road?
No, I think that, that's the curious dichotomy there, Guy. I think that the sterling is going to perform very well, regardless of what the BOE does. And as I mentioned earlier on, it's got to do with a higher beta. And in an environment where the US dollar is broadly weak, sterling will perform even better than the euro. And you can take my words to the bank with that.
Ven, always a pleasure. Thank you very much indeed for updating us. Bloomberg strategist Ven Ram joining us out of Dubai. It's a long weekend coming up in the United States. To set you up for that and what the session looks like going into the core PCE data a little bit later on, Mr. Manus Cranny is in New York. He's preparing for the brief. That is next. This is Bloomberg.